Lower prices are due on the S&P until the 18th of September. Today is September 4th, and we described last week that we were expecting a topping pattern to continue until this week, until either the 3rd or the 4th of September, and it did, and it came in on the 3rd. We said when people get back to work on Wall Street, they'll start getting serious. And immediately they had a big down day, and all these reports that came in that were seemingly bearish and seemingly bad for the economy and potentially a recession coming. All that may be the case, but the main story is the market needs to correct a little bit further, and we're looking at the original plan, which is it's probably going to go down into the 12th and have another low on the 18th. And then after that Fed announcement, we're expecting to see a rally until the 23rd or 25th of September, time-wise. Time is more important than price in our system. Okay, if we can get the pivot dates fairly accurate, then you're on the right side of the direction of the market, you can make money. So at this point, swing traders would be looking to short rallies. Day traders this week, we still have a potential 1 or 2 days where after we had a big down day on Tuesday, and today was kind of a nothing day. It didn't go up much, didn't go down. So the likelihood is we'll see a little more sideways to up action. This time of the month, the moon has a tendency at this point in its cycle to create a little bounce. So we could see a few day bounce, but not huge. In terms of the big stuff, we've talked about this for a number of months, that we're still bullish on the longer term picture, at least until the end of the year, and potentially until May of 2025. However, as this is the weakest time of the year, September, October, there's an election this year, and the uncertainty around the election will tend to create a little bit of confusion, and very few people want to make big bets in either direction. So we're not expecting huge moves. We're not expecting a crash or anything. At one point, we were expecting potentially a 16% correction. We got a 10% move quicker than expected, and we no longer think we're going to get a 16% correction. We might see that 10% decline revisited and get back into the 5,200 area before the election. But that yet, we don't know that for sure. Okay. So at this point, what we would say is continue to think in terms of shorting rallies, and then we're expecting some sort of a bounce after the election. If the decline is minimal into the 18th, it's still possible that we could see a new high at that point in the next rally that goes up into late September. There are two scenarios that are likely. One is the 24-year pattern, what happened in the year 2000, and the other one, which may be even more real, is the 17-year pattern, which happened in 2007, at which point the market did very similar behavior. It was also the last time that the Fed actually started lowering interest rates. And when they did so, by the way, they lowered by 0.5 point. And we think the probabilities are on the 18th, 19th, they're going to actually lower interest rates by 0.5, by 50 basis points, not 25, which initially may seem bullish, but it's actually a bearish situation because inevitably, with the money supply shrinking and with a variety of other cycles starting to turn down, we're going to see the longer term story is in the next 2 to 3 years, probably with a high next year, we're going to see a bear market that goes on into the early part of 2027. But when it's not ready yet, there's still a lot of prospective upside potentially until the end of this year, and there's still a lot of noise until the aftermath of the election. So we wouldn't make any heavy bets in either direction, nor would we run away from being long this market either. Okay? Now, again, we had been saying that the market was repeating what it did last month, kind of opposite last month, upside down, and it did, and so far is. And also that it's doing the same thing it did 2 months ago. And at this point, it's near a high, and 2 months ago, it actually went sideways for a few days, and then it took off to the downside. And 4 months ago, very similar. The even multiples of monthly cycle tend to have a similar nature to the present, and they both agree on a decline phase that goes on at least until the 18th of the month of September. And that's our update.